What's up? I'm Dave Freidenberg, and this is another chance encounter. Hey, what's up? I'm Dan Freidenberg. I'm a commercial real estate guy. I'm from the internet. We're seeing more properties like this being built in front of a house that's going to be torn down soon. I understand that there are power lines that are getting kind of close. What's up again? This is Dan Freidenberg, and that there is a commercial real estate building. I'm joined today with my friend Jason Martins. How are you doing today, Martins?
Wonderful, man. How are you?
I'm fantastic. After all, my very favorite audience member is here today. And why is my favorite audience member here today? It's because this is a chance encounter where I interview commercial real estate syndicators. That means buyers, that means sellers, that means investors. Now, why would I do such a silly thing? Well, it's because I found out if you want to get access to private deals, which are also known as 506B syndications, you need to have a documented prior substantive relationship, or else the SEC will get ants in its pants. But before we get too much detail about that, really, I'm going to show you how my guest fits into these deals and help you effectively communicate on the subject of commercial real estate. Before we get too excited about that, Jason, you want to say a thing or two about yourself before we talk about your business?
Yeah, I'm a multifamily syndicator, like Dan said, and I'm a certified property manager. I've been a property manager since 2007. What's that? 16 years already. And yeah, that those are my two passions.
All right, awesome, awesome. And so that I'm glad you put it that way because after all, it's the motivations piece that we start off with. Before I say that though, I got to say, but wait, check your eight. And Martins, I don't mean eight like behind you. I mean like on the camera. Can you see through the camera and into the user's device to see if they have that ugly red subscribe button, or if they hit no, it's just a stupid joke.
I do see it. Yeah, yeah. Matter of fact, I got to click on it.
You're right, yeah.
That's the plan. And guess what? It's free to click on it. Did you know that? I figured that
It's
out.
totally free, exactly. All right. So, but I need to make sure if I'm going to be doing business with anybody, I need to figure out like what's going to make you follow through on getting involved with this acquisition. Because everybody has their own unique reasons, but I really found I could distill them to these five. So the first one, some people are eager to preserve their purchasing power, and usually when that happens, it means they've already got a portfolio of assets, and the way that they make ends meet is through the proceeds from ownership. And so the only reason they'd be inclined to make a new acquisition of a new asset is if the inflation is wearing away at the purchasing power of that cash flow, or if they can get at a steep discount, like if there's an asset crash, that's when they'd be making their next acquisition. But that's not me. What I'm up to is trading time directly for wealth. Now, Jason, you've already got your background as a property manager, and so like I believe that this is a lot of what you're up to is taking the pivot. See, me personally, the reason why I'm in real estate is this one, and it's because I came from tech, and one of the problems of coming from tech and being a high wage earner, high salary earner, whatever, is that you're paying more in tax than anybody else. And so because I was doing tech, specifically CRM work and online web application and funnels and e-commerce, that sort of stuff, I was doing that for real estate. I was going like, well, why don't I pivot into something where I'm getting rewarded in the form of deployed capital, aka equity? And that's why I'm involved in all this. But a lot of people get into commercial real estate because they want to take control of their own schedule. Maybe that means they want to fast track retirement. Maybe it just means they want to work fewer months per year or something like that. But really, they are doing it as a method to eventually scale back a little bit, which is completely different from the next group. They are super duper ambitious. They're after the generational wealth. They want to buy their entire hometown, and they want to make sure that their great grandchildren never have to hold a day job. And so they're going to keep hustling to their 90s, which is fantastic. Just like the next group, they're also going to hustle into their 90s, but it's a little bit different. They want to help people, and they've found, like, maybe it's the environment, maybe it's animals or whatever, but they found if they're going to make a really big impact, there's a financial component to it. So that's why they're making these commercial acquisitions. It's for that group that they want to help. So Martins, as far as you're concerned, what's your magic answer?
Yeah, I think there's a power with real estate and the freedom that it affords people who invest in it. And not everyone has the understands that or has the ability to attain it, right? To buy real estate. So I feel like because I'm in that space, I have the opportunity to offer all of the benefits of real estate to my family, my friends, my kids, my grandkids, and generationally down, right? So it's almost like uh, uh, what's the word? But I have something to offer that I can hand down a legacy to the rest of my family and anyone else who can come on board. So I guess that's my answer.
I love it. I love it. And yeah, so you gotta love this electricity issue we've been having because of this ice storm. But these are the risks of podcasting. It's making this one of my favorite ones. Anyway, the
Yeah.
next question that I have to have is like, sure, lots of people say, hey, there's lots of money in commercial real estate, so sign me up. But it's like, hold your horses a second. This is a very old industry, and so there are risks involved. There's a lot of competition. You're basically not going to get the easiest properties out there because they've been scooped up by somebody else. And if you're ever involved in a 506B syndication, then you're going to have this questionnaire that you have to go through, and it asks about your tolerance for risk, but I don't think it does a really good job of establishing the truth. So I've got my own fill in the blanks question here for you, Jason, which is there are many popular investment asset classes, but I think blank is too risky. What's too risky for you, Jason?
Stocks, investing in Wall Street, to me, is just too risky. I mean, even blue chip type of stocks, McDonald's, and some of these bigger companies, American Express or Tesla, whatever. Well, you think, well, they'll never go out of business. Well, they could, but
Mm-hmm.
real estate will never go out of business. Real estate will always have a value. So I just, for that reason, I don't like the stocks. There's too much volatility in it. And I just like something that I can touch and feel and see and go visit. And I know that, look, 90% of millionaires got their wealth through real estate. So that's good enough for me. So for me, stocks are just too risky, and I really don't even touch them.
I love that. And with your property management experience, that unlike Wall Street, unlike these big companies, there's no PR department for an apartment complex, but these big companies, they have an entire department that's focused on spinning whatever's going on so that shareholders don't get a whiff of what's like the bad things that are happening until it's too late. That's why I don't like stocks, not to put words in your mouth, but talking about yummy stuff. Oh, that subscribe sandwich. He's really glad. This thing just kills me every single time. And it's the way that I know that it's time to bring out the Dan Does Deals Core Competency Cube. And you can get your very own copy at dandoesdeals.com. And like a dummy, I don't even ask for your email address, which is a super duper bad call because you should always ask for some sort of contact information in return for your freebie. But I want to make sure two things in every episode. One is that you end up learning how to effectively communicate on the subject of commercial real estate, but I also want you to know how my guest fits into these deals. And so in every episode, I take 2 minutes, I go through all 6 sides, and then that way you know what these are. And so I actually want you to print it out. I want you to show your friends and family and all that kind of stuff, because if there's one thing that's going to make that difference in your success in this industry is being able to talk about it clearly. So the first side that I need to talk about are repositioners, who are acquisitions people. They look at a bunch of different properties. They do a bunch of paperwork. What is this paperwork that they do, you may ask? Well, there's a fancy word for it. It's called underwriting. That means they're doing the math. They're figuring out, first of all, is this property even making the amount of money that the seller slash broker claims it is? Because they have all sorts of fun and games that they can do with the numbers, like giving you 14 months in a year instead of 12. It's real. It's bonkers. But anyway, the repositioner, they're doing this underwriting, they're doing this math because they're trying to figure out, how do we find more upside? And one thing you'll notice is that everybody seems to be a repositioner to some degree, and everybody seems to have financier relations, investor relations, because they need to be talking to all sorts of people who only deal with paper and money. Those are the financiers. But the reason why that's a key part is because if you can get a more advantageous loan, then that automatically goes to the bottom line of the profitability of the business. And so that's why they're always going to be talking to different financiers, trying to get cheaper money. But the first place that's more practical, where people are going to be looking really in Jason's wheelhouse, is the operations, the job of making sure those Benjamins don't go down the toilet. That's really important. But of course, there's a lot more to operations than just unclogging toilets. And maybe I lost my internet for real that time, but we'll find out. But anyway, there's more than unclogging toilets and mowing lawns and collecting rents and all that sort of stuff. There's one part, which is if the vacancy rate has problems, then you need a marketing component to really make that work. That's one of my fortes. And then the other things I do is the operations. But the next spot, but of course the next place the repositioners are going to be looking to find more upside is going to be the contractor team, to do a value add or to do renovations of the units. The reason why they do that is because if you're going to find upside, well, why not create it? If you have nicer units, then the next residents will be happy to pay more in rent than the previous ones, but you got to keep that under control. And one of the biggest ways, you need accountability, all that kind of stuff. And if you have the same problem that I have, and Jason's aware of this about me, but maybe you aren't, I'm from the internet. And that means I need locals. I need people who live nearby who can be there in an hour or two, because that's not going to be me, because I'd still be stuck at the airport in an hour or two. Okay, so it's not going to happen. So I need the boots on the ground. But when the repositioner has assembled this team and they turn around to the financiers, let's say it's a 350 unit apartment complex and it's worth tens of millions of dollars. They turn around to the banks and financiers and say, hey, you don't happen to have, say, tens of millions of dollars you want to lend us, do you? And of course, the thing that the financier is going to need to know that I haven't addressed, and a lot of gurus, they kind of gloss over this part. This part's super duper important. It is, who is the sponsor KP? And so the reason why that's a big secret is because you might be under the impression, maybe you're maybe you're a physician or you're an engineer or something like that, and you think, oh, well, a few friends of myself, we should pool our resources and take over an apartment complex. Well, the part that you're going to have a problem with is if you want to be eligible for a commercial loan, somebody in the fold has to already own a similar asset. Okay, so if you're looking at 350 unit apartment complexes, you have to have somebody in the fold who already owns a 350 unit apartment complex. On top of that, you need a certain amount of liquidity, and among the ownership team, you need a balance sheet of at least the amount of the loan. But when you've got all those pieces put together, you've got yourself a commercial real estate deal. So, Martins, do you want to go into? I know that you're good with this question, so why don't you tell the audience where you see yourself fitting in on your next deals?
Well, I mean, definitely operations, right? But there is. I have been focusing on raising capital. So if you want to call that finance, whatever it is, that because that's a major part of being on a team. So you have to understand asset management basics on asset management, and maybe that's an experience you have or a background you have, like I do. But I think for everyone involved, really, capital raising and raising money is a huge part of being able to close on some of these deals. But you're absolutely right about those KPs, though. You have to have a sponsor on your team and someone who's done these deals, and you're absolutely right about that. That is something that they don't always tell you up front. So, but that's definitely a big part of it. But I love capital raising. I love raising money. I love helping people invest their money in cash flowing assets, long-term legacy types of properties.
Absolutely love it. And so then let's talk about the buy box. And when syndicators, investors are talking about what's your ideal property, we're talking about three main things. First one's geography. Where is it? Okay, which states, which counties, possibly even which neighborhood? That's the first one. Second one's going to be size. We mostly talk about multifamily here, and the way that they define size is by unit count. And it's really important because some people are taking over 5-unit apartment complexes, other people are taking over 150 unit apartment complexes. So it's going to be a very different looking team between those two. So that size is the second one. But the third one's class. I like to separate class into two different words. Usually they just use the same word for both. But the first one is condition. And when it comes to condition, it's how old is the building? What kind of shape is it in? What kind of amenities does it have? Like, is it no frills at all, or does it have all sorts of luxuries? Okay, that's the condition. The second meaning of class is the area. And really specifically, they're talking about What are the school districts like where the property is located? What's the crime rate like where the property is located? And generally, how desirable is it in terms of like how many people go by that area all day, every day? And both of those two meanings of class, though, they rate them the same way as in grade school. So A plus is at the top, and then A minus, and B plus, and so on. So Jason, what are you looking for these days? What's really exciting for you?
Well, I think with the market the way it is right now, Class B assets are my target market, and that doesn't mean that you can't find something good in Class C. You certainly can, and sometimes you can take those Class C units and turn them into Class B properties just by making some of the upgrades. Maybe you get a property that's like on the borderline of a Class C to Class B area, and you can get it at a Class C price, make some amenity upgrades and rent increases and things like that, and next thing you know, there you go, you got a Class B property. But boy, I just, someone just brought to me a Class A property, but you know what? Those are a little bit riskier for me. But right now, I love Class B right now.
Great, great. And then as far as people to reach out to you, like my favorite thing about commercial real estate is because it's multifaceted. Everybody is eager to give more referrals, build new teams, and all that sort of stuff. But at the same time, we all have our own unique skill sets. Me, it's the marketing piece, it's the online piece, it's all that kind of stuff. And so the sponsors and KPs are generally the people who have the foundation put together where a person like me can make a disproportionately large impact. And when you're first getting started, you need grunts who will be putting in 80 to 120 hours a week. It's like, that's not my thing at all. The other one, though, is locals. I'm always eager to talk to, just because after all, I'm from the internet. But Martins, as far as who would be out there, don't entice investors if you have any 506B deals going on, or at least don't mention any specific deals or anything like that. But you can talk about beginners, but who are you most eager to talk to?
Locals, those are boots on the ground. Those are people who live in the city, who can go there if there's an emergency or if there's a hot deal that just came in the market and can be there in a short amount of time. So I love talking to locals and people in different markets that I like. Typically markets in the Southeast or Texas or some of those markets. So yeah, locals. I mean that's great. If you're a local in some of these great markets, give me a call or contact me, and I would love to talk to you about whatever deal might be in your area.
Perfect, perfect. And as far as how to reach out, me personally, I got this distinct last name, so I'm easy to find. LinkedIn is the best platform for that. If you do scan this QR code, though, that brings you to the FAQs page of 506 BME, which is the platform I offer for documenting your substantive relationships with your investors. The purpose being, when you get a certain amount of assets under management, the SEC will give you an audit. And the thing that they're going to be looking for to figure out if you're posing as a broker dealer is, did you actually have that documented, those relationships with the people who you did business with? Or were you pitching people all willy-nilly, which you can't do? But Martins, as far as you go, like, what are the best ways to reach out?
You can go to my website. My company is Atlantic Property Solutions. That's Atlantic Property Inc. Inc.com. You can email me at Jason, that's Jason, at AtlanticPropertyInc.com, or search for me on social at letter J Martins CPM.
All right, excellent. And then the last thing, it's actually not for you, Jason, it's for you in the audience. It's a public service announcement. If you've been watching this and you've been experiencing searing pains in your eyeballs and it's like your brain feels like it's like exploding, it's probably the hideous red subscribe button that's down here under the screen. And if you just click it, it's gone. It turns into a gray one. It's really nice. You should see the gray one. I really like it personally. But of course, I like it because if enough people click on it, then that means YouTube will start to pay for these videos instead of me. And I think that would be amazing. But as far as you're concerned, all of that means is that my videos might show up on your list of suggestions. I have no problem with you ignoring those suggestions. I just appreciate the fact that you spent this time with me, just like Martins. I'm glad you joined me today. It's been great.
Yeah, it's great. Thanks for having me. It was a real honor.
Awesome. Sweet. Make sure you 506B me. Any syndicators, make sure you 506B me.
Hi.
Oh, hey. Yeah, here's my code. You got your QR code scanner? Okay. Yeah. Oh, yeah. Just hold it right in the square there. Okay, cool. And now you hit open in browser.
Okay.
Okay. Are you already logged into 506B me?
Yes.
Yeah, okay, cool. Yeah, so there's my video. So now I'm already on your watch list. So when you get back to your hotel, You can find out what my core competencies are and my level of sophistication. Sound good?
Yeah.
I love your hat. Real estate's a scam. That's really funny.
Yeah.
Nice meeting you.
You too.
506 B me, everybody.